Hello everyone. In this video, we will try to understand types of expenditure on the final goods and services. So, one type of the expenditure on the final goods and services is known as the private final consumption expenditure. This is the expenditure on the final goods and services by the households. I hope you are getting the meaning of household, group of peoples who have the same consumption habit. So any goods which are coming from any firm, any good which are coming from any firm, the first type of expenditure on that particular good is by the household, known as the PFCE, private final consumption expenditure. Second type of expenditure on that particular goods is by the government final consumption expenditure is known as the government final consumption expenditure on those final goods coming from any firm, services coming from any firm, expenditure made by the government is known as the government final consumption expenditure. Now the third type of expenditure on the final goods and services is known as the gross domestic fixed capital formation. In this gross domestic fixed capital formation GFC, what we do is that we just form fixed capital by the use of those goods coming from any firm. For example, if we are taking the example of household, so household can buy only new houses for the formation of the fixed capital, and the for the firm can buy new buildings, firm can buy new factories, firm can establish new machine as a capital formation, and for the government can do the infrastructure development for the capital formation. This is the third type of expenditure on any particular goods coming from any firm. A new topic after the expenditure on the final goods coming from any firm, the three type of expenditure, I hope you are getting the meaning. One is the PFCE, second one is the GFC, third one is the GFCF, gross domestic fixed capital formation. Third one, a new one is the gross domestic capital formation. We try to understand the total capital formation of any domestic territory. So for this capital formation, first is the GFCF. First, as we had seen, the expenditure made by the household, made by the government, made by the firm in order to form a capital good. So in the GDCF, total capital formation, first we calculate the fixed capital formation GFCE, and the second one is the change in the unsold stocks. Unsold stock means when we are thinking about any firm, at the beginning of the firm, that at the beginning of the year, that firm contains some raw material, that firm contains some semi finished good, that firm contains some finished goods. Take example, let's say a car company. So in order to make any car, this car company first have some raw material, let's say steel, some semi finished semiconductors goods, and some completed stocks, some car in the beginning of the year. Let's say whatever its financial session, the beginning of the year, it has some raw material, it has some semi finished good, it has some finished good, and at the end of the year we calculate the same value, what the raw material which this company had, what the semi finished good which this company had, what the total finished good which this company had. Then we just find out the difference of the value of these semi finished, total stock, opening stock, and the closing stock, and we add those values, that will known as the gross domestic capital formation, GFCF, plus change in unsold stocks. Total would be the capital formation in any particular economy. This capital formation also shows the potential growth rate of any particular economy. So I hope you are getting the meaning of type of expenditure on any particular good. There is three type of basically expenditure on any particular good. One is known as the government final consumption expenditure, second one is known as the private final consumption expenditure, and third one is known as the government gross domestic fixed capital formation. A total capital formation would be calculated by adding first the gross domestic fixed capital formation here, and then the value of total unsold stocks, value of change in the unsold stock means the difference between the value of the raw material, semi finished and finished good at the opening of the year and the end session of the year of any particular firm. This total value, when we add, we will get the value of gross domestic capital formation. So I hope you are getting the meaning of how the expenditure made on any particular goods coming from any from type of expenditure made on any particular goods coming from any firm. So thank you for watching.